It's Thursday, May 6th. This is The Street Live. I'm Katherine Ross, and I am joined, as always, by Jim Cramer. But before we get started, I do want to apologize. We did have some technical difficulties on our end, but we are glad to be with you this morning. And while Jim and I were sitting here, we were talking about one stock that's on his mind, so I want to kick it off with that, Jim. Etsy.
Yes, and I, too, apologize. There's going to be difficulties periodically in this whole Zoom setup, of which who isn't more tired of Zoom than I am. But Etsy's down a lot. Now, you could say, one, Jim, you're from Brooklyn. Etsy's from Brooklyn. Two, Josh Silverman, you've done a lot of work with him. Here's what I'd come back and say. It's Mother's Day. I think a preponderance of people who used it for Mother's Day last year because of the shutdown are back. The changes, always palpable, about neural networks, making it easier and easier. So I guess maybe you could say I'm a homer for Etsy, but Etsy did have a line about how they have to spec because there was such hundreds of millions of dollars of masks bought last year. And also because, obviously, the shutdown, that there's a chance that they could have a drop-off after the stimulus checks. I come back and say that Etsy's learned behavior, and if the stock were not down at this point 25 points, I'd be probably a little circumspect. But I just think you're being paid now to take the beating that others had to take without we do it vicariously. In other words, consider Etsy where it was yesterday, which was up a lot. I feel the same way, by the way, Estee Lauder. And now look at it today, and it's the same company, except for it's much cheaper. It's not damaged goods. It's a damaged stock. And to me, that means buy Etsy.
And hold it if you own it, correct?
Yes, and maybe buy more if someone says, if some wayward analyst downgrades it. I just think that Etsy is a way of shopping, and it's the anti-Amazon way. We all love Amazon, but in the end, what happens? We buy things that are not handmade. We buy things where you don't get in touch with the seller. At the Longshoreman, our reopened restaurant, when we wanted beer taps. Well, I mean, they don't make beer taps in this country, so we had to go overseas through Etsy. Well, you can't buy anything but standard aprons in this country. But if you want beautiful cloth aprons, you go to Etsy. We outfitted many of the fixtures of Bar San Miguel and Longshoreman by Etsy. Why? Because we do not want to be part of what looks like a manufactured company. We want craftsmanship, and we want truth of craftsmanship, and that drives us to Etsy. And clearly, we are not alone. So to sell the stock now, as so many are, because they're worried about difficult comparisons, is losing the sight that Etsy equals truth. And truth is very hard to come by.
Jim, what does Etsy, if it does, tell you about this market at all?
Well, I mean, Etsy's kind of a good example of what people think when they have a stock that is over because of the pandemic winding down. But I don't like that. I think it's a false narrative. One look at Kellogg, which had a dramatically good quarter, tells you that that's not the way to play it. Kellogg was the ultimate work-at-home stock, and it delivered a very good quarter. So I think we all have to just stop thinking what we know is no good and start thinking about what might be good. It's a change in attitude. I think that a lot of us have tried to figure out and guess what the consumer is going to do, and a lot of us have been wrong.
So, Jim, Gary Gensler, the new SEC chair, will testify before the House Financial Committee later today, and he plans to talk about the gamification of trading, GameStop and Robinhood, and, of course, payment for order flow. What do you want to hear from Gensler, Jim?
Well, I think that Gensler is probably from the Brandeis School. He wants sunlight is the best disinfectant. I think he wants everyone to know what's going on. I mean, it's going to be very hard to say, listen, we can't block payment for order flow, but we got to be sure that people understand that they may not get the best price for you because they're and then they'll explain it, paying for order flow. I also think that they might regulate how short selling goes, because is it really right that there be more short selling than there are shares? That doesn't work. Now, the question that I want him to answer is, are the people in Wall Street Bets a proxy group? In other words, like, let's say you and I got together with a bunch of other people and we ended up having 8% of a stock. Well, we might be viewed as being a proxy entity, an entity that has to admit how much they bought and declare and and disclose. What happens if the same thing happens with Wall Street bets and they have to just say, okay, listen, we have 250,000 people and they're part of a voting block. I mean, you have to, it's entirely possible that they may, that's an SEC rule, that they could find that there is a staged group of people. So, I mean, I think that if I were Wall Street bets, I'd be very afraid of what's going to happen. If I were a gamer, I would say, look out, I'm going to find new rules. And if I am Robinhood, I think that Robinhood may have to face the music and say, or that, look, this may not be the best price you can get. And now, since it's viewed as being a free site, what you have to do is then back in how much you may be losing because of payment for order flow. I think they'll argue that you're not, but I think other people could argue that you are. And so therefore, what you see is you think you're buying it for free, but you're not. And that's good to be disclosed. And I bet you Gary Gensler, tries to make it so that you actually know how much it may be costing you. And then you might just go to Morgan Stanley.
I want to take this opportunity to talk about some of the stocks driving the news and also the market this morning. And one such stock, Jim, is Peloton, because they're recalling all treadmills following various reports of injuries and a death. So CEO Jim Foley has apologized for not cooperating with the U.S. Consumer Food Product Safety Commission sooner. But Jim, what's your advice for people who have Peloton here?
Well, look, I think that Foley is doing everything right. He's going to send a technician to your house. If you don't want it, it gets taken out. You can't do better than that. I think he's an honest, good man. Stock has come down a lot. I've always liked him. I just felt the stock had gone up too much. I know it's dicey because we don't know how much it's going to cost him to do what I just described. But what he's doing is clearly the right thing, after maybe you think he didn't do the right thing initially. And the stock's been punished endlessly. So it's entirely possible that unless everyone takes it back, which I don't think they will, I think that it could be a very interesting stock here, and I've not felt that for the last 30 points.
I wonder, Jim, if you think that this stock could almost be like a learning experiment for some investors, watching a company go through a difficulty such as a major recall like this, while also seeing the stock's up 1% right now, but it's very volatile in this trading session.
Yeah, look, I mean, I think that one downgrade suggesting that the recall is going to be prohibitive will crush it again. I mean, remember, it's a stock that's up a tremendous amount. And maybe you buy some now, and it's the first time I've suggested buying this. You buy some, I mean, since it was the run-up. You buy some now, and then you see if there's going to be a downgrade, and then you buy some again, because I think that we'll be surprised. I think it's a loved machine, and I think that people will not want it taken away. And that's a very, very big deal, and it makes me think, you know what? It's okay to buy.
So, Jim, we also have rocket companies in the news. It was also stopped trading. This company is down the stock is down nearly 16%. And you said that investors think it's too risky to own Rocket here. I'm wondering if you agreed with that.
Well, I said it.
No, I mean, do you agree with investor sentiment here?
Oh, I think it's overdone. Look, Rocket said some things that you never want to hear. Talking about margin compression. And then when Jay was on, Jay Farnham, I mean, Jay wants to dominate the industry. And Jay's capable of, they have the best technology. They have great loaning capabilities. But he wants to take share. And when you want to take share, what that says is, look out. I'm willing to lose, not money, but have lower gross margins in order to basically wipe out others and take business. And there are a lot of others. So I looked at it and I said, Jay's being aggressive. There'll be a price where Jay's aggression is priced in. And I think we've got it. I like that stock right here. I like it a lot. Now, these are two, you can say, listen, I like Etsy, Fallen Angel, Peloton, Fallen Angel, Rocket, Fallen Angel. But I have said over and over again that this market gives you these opportunities for situations that seem like they're damaged, where what's really happened is the stock is overly discounting the negativity. And then when they actually report, they do pretty well. I would love to own Rocket for when it reports next.
What about Tapestry? They reported earnings and North America sales returned to pre-pandemic levels. Jim, we're talking about fallen angels. Is this a stock that's an up-and-coming angel?
I visited a bunch of Tapestries. I'm very impressed. I think that we're seeing a renaissance there, and but I do know that retail has just run so much that I'm skittish, and I'm skittish about Tapestry. I like American Eagle Outfitters. I like Gap. I like Yale Brands. That's the lag trade of Matthew Boss. At Costco, the numbers were extraordinary. We like Walmart. I like Lowe's, Home Depot, and Target.
And just on a personal note, Jim, it was interesting because last weekend I had a conversation with a friend and she bought a Coach bag for the first time in years. I mean, my generation kind of grew out of Coach. So it's interesting
I think that there's a retro Coach. My daughter has a retro Coach she bought on eBay, secondhand. But I would say that there is, without a doubt, a great retro feel. I think that they have done a lot of good work. And I think that it's an interesting stock. But I have to be very careful because I just know there is so much froth in retail that I'm worried about it.
So let's move on and talk about another earnings report that we got, and that's Uber. They did top analyst expectations, but they did miss on revenue. They topped analyst expectations for earnings, I should say, and they missed on revenue. So Jim, you don't think that this is the right stock for this market here, correct?
I've been spending a lot of time on this one because remember, I've now liked a bunch of stocks that are down. But here's the problem. The secret to Uber is autonomous driving, because drivers I knew eventually would cost too much. What I didn't realize is that they would cost too much now, which then makes Uber not cheap. A lot of us took it for granted that Uber wouldn't be expensive. It is. Uber can't make it up with delivery. As someone who owns 2 restaurants, I've got to tell you that the desire to go out is insane. It's insane how much people want to go out. And the corollary is it's insane how few people want to eat in. They can have drizzly, they can bring liquor, it doesn't matter. Eating in is gone for now. And we're in a business of what's going to happen in a given quarter. And I just don't think their next quarter can be good. I don't think.
We've talked a lot about stocks that were fallen angels, but maybe coming back, and you've been, giving your recommendations. But one stock group that I want to talk about is FAANG, based on your Mad Money coverage last night, Jim. Your portfolio owns Facebook, Alphabet, Amazon, and Apple. And Apple, of course, is own it, don't trade it. But Jim, I'm wondering, these companies are built to last in your eyes. So should an investor look to expand a position in a FAANG name here?
I think that any of them that are down for the year are very, very, very compelling. So I think Netflix is compelling. I think Apple is compelling. I think Amazon is compelling. I know that if you were on the Etsy call, you might think that you shouldn't be in Amazon. But remember, Amazon is not just a retailer. Amazon Web Services may be one of the most well-run businesses in the world. So I see a lot to like about Amazon. What I don't see is the endless obituary for FAANG. I mean, they can't all go up at once, for heaven's sake.
All right, and with that, we're heading over to our Action Alerts Plus daily rundown show over on actionalertsplus.com. I do want to take this opportunity to once again apologize for our technical difficulties, but we always appreciate you guys joining us. So come join us for our next show over on AAP. I'm Katherine Ross, and we'll see you tomorrow.